In this video, guys, we're going to look at 5 signs of a strong close, a useful indicator whether you want to hold your trade, get into a fresh one. Stay tuned. Hey guys, warm welcome to you. Okay, so a strong close is handy, right? Because we want to know, let's say we're in a day trade, we're holding it, comes up to close, we've got to make that decision. Do we close the position at the bell or do we hold to see follow through overnight, potential gap, potential rally the next morning and judge it on the next day? So we're in that position. Same with your swing trading. Perhaps it's coming to your target zone and you've got a zone where you want to exit, but it's kind of, you want to see if it's a strong close again, see if you get that little bit of extra juice on the next day. Because why waste it? If it's strong, you might get a nice gap up, make them close at the open, or you can at least pull your stop up to the prior day's close, that kind of stuff. So let's have a look at 5 ways that we can look at the close to identify if potentially it's strong, and then guess that or assume that if it's a strong close, the next day is going to open strongly as well. Going to get a strong open, going to get a gap up. Okay, so number 1, closing the upper 25% of the range. So this is pretty kind of obvious, really. Can we see on the screen? We can indeed. So let's say we've chugged along and we've done this. We're just going to segment it into quarters, basically. So we've got a 50% here, we've got our 75% here, and we've got our 25% here. We want to make sure we're closing in this upper quadrant of the day's trade. Now, that rings true for any day. If you've had a trending day and it closes up there, that's ticked. Both boxes have been ticked. If you've been in a range bound day and it closes in the top, you've got to be careful. You've got to add something else to it. That's just not good enough on its own. You need to see it in kind of fresh territory. In other words, you know, if it's been doing that all day and it happens to close there, that's not really a strong close. It's okay, but is it enough to kind of go in for a fresh position or hold a position? Probably not. But generally speaking, if we've kind of pushed up and had a reasonable uptrend or some kind of up move and we've closed in the top 25%, you're good. It's like if you have a good, strong trend day that closes in there, the chances of follow through the next day are usually pretty high. The statistics show that, you know, I don't know what the actual numbers are. They probably changed loads, but when I last checked, which was a while ago, there were really, really significant odds of us tagging that overnight, going higher, opening, and then retesting that overnight high. So the trade used to be, if we kind of moved down overnight and you got that little trade there, you could take the long at some point knowing that you'd at least retest that prior day's high. That always used to be something that would trade off very nicely. And so from a perspective of holding it, if you know that that's likely to happen, you feel more comfortable holding the position overnight or initiating a new long position. All right, number 2, making a late rally to close at highs. This is a really good one, actually. If the market's been shifting around all day, or even if it's been trending in a shallow way all day, and then makes a kind of extra push and closes at highs in the top sort of 10%, really is what you want on that last burst. So last 30 minutes, 40 minutes, hour, whatever it may be. If you see that, that's an indication of a strong market, even if it's an acceleration of the uptrend or it's been in a range and then bursts out. The idea is that institutions have put some money to work, but they haven't finished the job. They might do some overnight, but most don't. They're looking to follow it through the next day. So for whatever reason, we get a good push into the close, and that's an indication of a strong market. Number 3, guys, closing above a key resistance level. Pretty self-explanatory, but if we've had a decent level intraday that has struggled, then in the last kind of hour or 2 hours, and we do some work above it and we close above it, that's a sign of strength. That's a sign that the buyers are back in control here. There's a lot more demand than there is supply. They haven't pushed it back under that resistance. We could think, okay, it's a strong close, maybe initiate a position, maybe I'll hold a portion of the position. It looks good, especially if you get that, combine it with this. So it's the upper 25% of the range. You get a rally into the close, that breaks that resistance level, holds through and holds into the closing bell. Good signs. Number 4, broad strength. So if we're trading the indices, do we have broad strength across the stocks? In other words, are stocks in that index basket, are the basket of stocks in that index, should I say, are they all running in unison? In other words, are the majority of them breaking up into key levels? Are the majority of them closing at highs? Have the majority of them exhibited some of these patterns? If we get that broad strength, rather than just maybe if you're trading the Dow 1 or 2, which are really overly weighted, then potentially you could say, well, There's broad strength there. It's driven by a lot of flow coming into each individual stocks and the futures themselves. Subsequently, your spread bet or CFD, or whatever you're trading. So it's going to push it up. Same with the FX pairs. Obviously, there's no real close with FX pairs, but let's assume you're kind of going off the London close or the US close in terms of the cash equity session, and you want to know whether, should I hold this for a little bit further run into the next session or whatever. Not quite as powerful, but similarities. You're going to look at the similar US pairs. If you're trading USD, you're going to look at USD pairs and see if they're correlated or inversely correlated, if they're flipped around. You get the idea. You want to see if the whole of the dollar is strong or whole of the dollar is weak or pound is weak, etc. Number 5, high relative to the prior 5 days. This is a really good indicator. If you've been sitting in a range for 5 days, or you've been trending and you kind of close at the highs of 5 days and you've still got some more trading days to go in the week, be cautious about this over the weekend. But if you've got some stuff in the week the next day, that's a good indicator that money might flow in. We might push up. One little caveat, guys, don't forget to look at your weekly ATR. If you've done a big move already and you're at your weekly ATR or above your weekly ATR, be careful chasing that move. But let's say you haven't done it yet, early in the week, Wednesday, Tuesday, something like that, strong close, closing at highs, above resistance, above key levels, highest on the week, broad strength across the index, then the chances of some follow through the next day are going to be pretty high. And you can just flip this all on its head for weakness, guys, same kind of thing. All right, see you next one. Take care. Thumbs up if you like this kind of stuff. Bye-bye.